Hi, I'm Phil Hall, and welcome back to The Housing Show. Today's program is all about values. We're going to be talking about corporate values with Paul Anastos, president of Mortgage Master. But first up, we're going to be talking about appraisal values with Brian Coester, CEO of Coester Valuation Management Services in Rockville, Maryland. So Brian Coester, in your opinion, what is the overall state of today's appraisal industry?
So the appraisal industry right now is coming out of some major changes, both with the HVCC that happened, that's now Dodd-Frank, and now appraisal independence, or AIR, and then you're dealing with a whole bunch of questions in the appraisal industry of what's going to happen with customary reasonable fees, what are the state boards going to do, what are the future of trainees, and right now I think the appraisal industry is going through that change and looking for some answers. And a lot of appraisers are upset about stuff, and a lot of appraisers are wanting to know, is there a light at the end of the tunnel when it comes to legislation? Is the mortgage industry going to help get a little bit back on their side? And is the appraisal industry going to be something that's sustainable for the future with new licensees coming into the state?
Well, appraisers have had a ton of regulations dumped on them over the past few years. On the whole, have appraisers been able to keep up with all these regulatory changes?
So I think they have. I think they've done a good job. There's been a fair amount of legislation on the appraisers. Probably the biggest things are kind of like small things that make big differences, like the FHA not allowing only certified appraisers to inspect the property, not allowing license, like Fannie Mae and the GCs coming out and saying you cannot allow a trainee to inspect the property. So those two things that were recently put into place probably have had the biggest effect on new appraisers coming into the industry and appraisers working within the existing framework. The thing is that the legislation that has been enacted about appraisal independence, about leaving appraisers alone, has really been around for a long time. It just wasn't enforced to the level it is. Appraisers always knew in the back of their mind, these conversations shouldn't be happening. I shouldn't be under this pressure. Now I think they've formalized that and fortified that to where the appraisers do have a place to go. Lenders are a lot more standoffish when it comes to the appraisers, and they're getting treated in a much better way. But at the same time, now they're dealing with all these other questions, which you're seeing they don't have the answers to yet, and it's somewhat frustrating.
You mentioned new appraisers. I know a lot of lenders have said to me there's a challenge to bring new people into the mortgage lending sector. What about the appraisal industry? Is this an industry which is attracting young folks out of college?
It's not, and that's a big issue, and that's something that dealing with that is going to be difficult from a number of levels. One of it is that the legislation surrounding, I wouldn't say legislation, the policies surrounding trainee appraisers. If you're traditionally, the model's been you work in the appraisal industry for 20 years, you get a little older, you may want to grow a business, you hire a trainee to go out and inspect the properties for you, take photos, and then you write them up, sign it off. Maybe you go with him sometimes on complicated ones, and that's been the kind of the model. Well, without that, and the regulators coming in and saying, a certified appraiser has to inspect every property, well, then the appraiser says, well, why don't I just do them all myself? Like, why am I going to pay this guy to go with me? It is almost similar to where if a doctor had to administer every shot, well, what is the nurse for? Or if he had to be there for every shot, well, I could just do it myself. Similar to that. So there's probably a lot of, and there always has been a lot of interest in getting into the appraisal industry. It's just not a lot of people are willing to take on the trainee because there's not really a fit for them now.
There's also a whole onslaught of technology that's come into the industry. How has the industry been able to keep up with the high-tech changes?
So the appraisal industry is pretty good. The appraisal industry has been pretty good. They've been digital a very long time. The UCDP was a big shift with the XML, with using the codes instead of traditionally writing in. But I don't think the technology shift has been that big. I think getting appraisers used to using mobile is something that they've adopted well. I think getting appraisers to start using online systems instead of, just kind of using the fax machine type thing has been fairly well. And most of them are relatively current. All the appraisers are somewhat tech. You got the extreme that are very tech, who are almost fully in, to current technologies available, which is they're using their iPad, they do inspections, everything's digital. They're using the latest form software to pre-fill everything, and they're downloading data directly from the MLS and putting it into their software. And there's a lot of good appraisal software vendors that have enabled appraisers to really automate a lot of things and keep up with it. They did fairly well with the UCDP, and then the other side of that is the ones that aren't that tech are still pretty digital. Mm-hmm. And they've adopted it well. There are some new things that are coming out. I think that there's a big play right now for a desktop appraisal done by an appraiser that's about $100. I think there's a big play for that, and there's a lot of people working in that space now to kind of make one that's similar to an iPad app where you can just swipe, or TurboTax where it kind of walks you through to some type of limited scope appraisal. Mm-hmm. But the appraisal industry is, I think, doing fairly well.
Brian Coester, thank you very much.
Well, thank you.
If you were watching the housing show last week, you would have seen the first part of our interview with Paul Anastos, the president of Mortgage Master Incorporated. That was a two-part interview, actually, and here's the second part of our conversation with Paul. So, Paul Anastos, what is your approach to business? What is your core philosophy as the president of Mortgage Master?
The biggest thing about it is we think we have a really good model. We're sure we have a really good model where we give the consumers the best possible rates on the widest variety of programs. So we want to keep our product range really diverse, so there's a lot of options for consumers. And with those options, we want to give them really competitive rates. Our size obviously helps with that because we have the attention of a lot of both of the agencies and a lot of the large banks. From there, a lot of it's just spreading the word through salespeople. If you have good salespeople on the ground, we don't do any major marketing campaigns. That philosophy is not going to change. We rely heavily on the word of mouth through our existing loan originators who are out in the field. So what we try to do is attract the most talented originators we can find. We've had good success with that. Of our 270 plus loan originators, approximately 20 of them are in the top 200 in the country. So almost 10% of our sales force is the top 1% plus in the industry. We try to attract people like that so they can spread the brand. We don't need to have a flag in every state or in every single market. We just want good people in those markets representing the customers.
Well, as somebody who comes from a background in marketing, I'm sort of intrigued by what you say, that you don't engage in major marketing campaigns. Is that a conscious effort, or is this something that you realize that maybe major marketing wasn't what worked for you?
It's a conscious effort in the sense that we don't believe big in mass mailing or television advertising, radio advertising. What we believe in is providing good service to our customers and letting them spread the word on that service. We certainly market to our existing database of customers, so people that have worked with us in the past can continue to get information about the company. Beyond that, it's through realtors and referral partners and existing customers is how we do all of our spread of who we are and how we do things. We view it almost like the way you would go pick up an attorney or a accounting firm to represent you. We don't do it through advertising. We do it through good quality service that we hope customers enjoy and they share the word with other people.
As a president, how would you describe your leadership style? Are you a hands-on micromanager type, or are you comfortable designating responsibility to others within the organization?
In a sense, it's a little of both. I mean, I certainly want people to make decisions and do things the way they want to do them. You want people to enjoy their style and to get a feel for their style, because if it's me telling them how to do something, it's not as comfortable as them approaching it the way that works and me helping just tweak it or make suggestions. So I think it's hands-off in that approach. At the same time, I always am of the opinion that to manage a business well, you manage it from the ground up. So understanding the challenges of your salespeople, of your operations people, of the people that stack, the guys who stack the files in the file room, if you can better understand everybody's challenges and down in the trenches where they are, you can help make decisions to make their jobs easier.
I don't want you to start pinning medals on yourself, but since you've been president, what has been your greatest accomplishment? And on the flip side, what's been perhaps the greatest disappointment?
Good question. The greatest accomplishment is certainly, we went from, under my term, I guess, we went from 2 branches up to about 40 branches at this time, and from 145 employees up to 700 employees. The growth is an accomplishment, but I think it's the chemistry of the growth is our greatest accomplishment. How well people work together, how much people actually enjoy working with one another is the greatest accomplishment. You always see the companies like, that a company like Southwest or Apple or places like that where there's an incredible amount of chemistry amongst their amongst their employees. What we wanted to achieve was that, where employees enjoyed working together, and I think we've done a good job of accomplishing that. From a failure perspective, or just where you're falling short, is there's 500 things you could do better. I almost can't even break it down. Even when you do things well, I don't think you ever sit back and judge yourself on what you've done well. It's how could we have grown that branch better? How could we have grown faster in the Mid-Atlantic, which is a market where I feel like we should have the same buzz that we do in the Northeast? How can we move files quicker? How can we better represent our customers? How can we get more products than what we currently have? There's an infinite list of things that you're constantly adapting and working on to provide better service. So I'd like to tell you that the list is short, and I wouldn't consider them so many failures, but there's definitely things that we can improve upon.
Would you believe me if I told you the Loch Ness Monster is lurking in the waters behind me? Or Bigfoot is running about in the woods behind the waters? Good chance that you wouldn't believe me. I don't blame you. After all, there's really no such thing as the Loch Ness Monster, or Bigfoot, or the Abominable Snowman, or Ogopogo, or any of those wonderfully funky cryptozoology animals. But that's the beauty of it. You keep telling a wacky story over and over, and sooner or later, somebody's bound to believe you, and you can have a lot of fun with them. Something similar has been happening with the mortgage banking industry for the past several years. A number of regulators, mischief makers in the media, self-appointed consumer advocates, they've been running around telling all sorts of crazy stories about mortgage bankers. They've been cheating people out of houses, they've been forcing them to sign loans they don't understand, they refuse to work with them when they're having difficulty paying their mortgage, they're just kicking them out with no recourse whatsoever. Like the Loch Ness Monster and Bigfoot, that's a lot of hooey. And if you don't believe me, ask the folks at the CFPB. Yeah. Earlier this year, the Consumer Financial Protection Bureau put out some data which they analyzed all of the mortgage-related complaints that came into the agency during the past year. And you know what they found? More than 3/4 of those complaints had no merit whatsoever. They were dismissed. And the other 25%, well, they went through that as well, and less than 2% resulted in homeowners receiving financial compensation for serious errors that were made against them. I'm not saying mortgage bankers are 100% perfect, but the idea that the industry is running around trying to destroy the lives of people and ruin Main Street America, if you believe that, I've got a Loch Ness Monster to share with you. Until next time, I'm Phil Hall. Peace out.
The Housing Show airs every Friday at 11 a.m. Eastern Time and can be viewed exclusively on MortgageNewsNetwork.com. Thanks for watching us here on Mortgage News Network. You could be part of the action here. If you have a product or service for mortgage professionals, you can be a sponsor and have your commercial here on Mortgage News Network. And if you don't have a commercial, that's okay. We have plenty of clever and creative folks behind the camera who can make a commercial for you. For more information, please send an email to info@mortgagenewsnetwork.com Or for immediate info, please call Beverly Bolnick, our National Sales Manager, at 516-409-5555, extension 4, and she'll tell you how you can be part of the action.
This is Mortgage News Network.